To have you on the program again, Sean. Do you agree with Fitch and Moody's?
Yes, I do, and I must say I'm surprised that the markets took an upbeat view at all on Friday when it came out, because most of the headlines actually came out during the Asian session, so we took a look at them there, and we gave it pretty much a thumbs down as far as what was agreed, all very long-term, no increase in the size of the second bailout fund, the ESM. The extra funding for via the IMF, which is an idea that is not confirmed, but they could explore it. That's one of the positives, but mostly very long-term. And given that we just heard from the ECB that it really didn't plan to buy too many more bonds in the secondary markets, it really wasn't enough. So I think the sell-off this week is probably a better reflection of the actual deal.
So the market must be waiting to hear from S&P. When do you expect we will hear from them, and what are they going to do?
Yeah, it sounds as though it's any day, really. When they made their warning, they sounded as though they were in a relative hurry, that they wanted to see the summit. Now they've seen that. I'm not sure what they would be really waiting for, except we often hear from them after the close of US trade. So I'd say in the next couple of days after the US session, we may well see a downgrade. So I would expect that France in particular looks extremely likely to be downgraded. Germany is I'd say probable, but it's hard to say. That's maybe a little bit more line ball.
And what would the fallout be? I mean, would this be a big shock?
Well, I guess we've had the market's been prepared for it somewhat. The focus on Germany was certainly a surprise, but it's probably not going to be a huge bombshell in as much as we're starting to get used to credits, whether they're sovereigns or banks or all manner of companies being rated a lot lower than they used to be. We're really in a different world where there are far fewer AAA investment options available. So it'd certainly be a negative when it hits the wires, but it's probably not cataclysmic.
So what's next for the euro? Where do you see it at the year end, and where do you see it 1 quarter into next year?
We do have a downside bias. I guess we're not looking for a massive decline. We've been calling 130 has been our short-term target for a while. I guess into Q1 we may be talking 127, 128. But at this stage I wouldn't be more aggressive than that. Partly because the positioning is already so short euro as far as speculators in the futures market. They've held very large short euro positions for a number of months now. So they've already sold the euros and they're waiting for someone else to come in and sell it. Plus we've got some capital coming back from Europe to shore up European balance sheets. So I do think it is heading lower, but it might be more gradual than some of the specs would like to see.
So we've seen a bit of weakness in the Australian and Kiwi dollars because of the risk aversion on the markets. Are they good buys, would you say?
You might have to wait a little bit, I think, as far as getting value there. You can probably pick them up cheaper in coming weeks into year end. You're quite right as far as the risk aversion. It's funny to see that the Aussie and the Kiwi tend to underperform the euro even when bad news comes out of Europe. So even though the growth is very solid here, the fiscal positions are extremely sound by global standards. You can't avoid that impact from equities and global risk appetite. So Aussie and Kiwi probably head a little bit lower near term, but again, they're not showing any signs of collapse.